everybody. Everybody out there hear me? Take a look at the live chat. How's it going? Good morning. Not able to put comments up on the screen, but thank you all for being here. Got a couple of good mornings. Thank you. So yeah, today, the topic, the title that I picked for today's session was "Everyone has a plan until they get punched in the mouth," and pretty much, I believe that's where we're at, right? I think a lot of us start out our journey in crypto together with a specific plan in mind. We had kind of planned on playing out this bull market from the beginning of it through some sort of parabolic top and then exiting orderly at a parabolic top. Well, we clearly haven't gotten any sort of parabolic top. Rather, we've had these rolling tops that we've been talking about for a while now. So, I want to start to kind of strategize, what do we do next, right? If the plans have fallen apart, and even my plans, like, so my trading plan was, hey, when we lose the 120-day moving average, you guys know this well, right? When we confirm that as a resistance and lose it, then I'm getting on the sidelines with my tradable accounts and getting into stable coins, right? Until things clear up. Well, I didn't do that yet. And big reason is even my plan has failed me so far. And I don't know that it's over with yet, but we sliced through the 120 so fast, I really wasn't able to validate it as resistance. We've come back up close to it, but even my plan of, okay, wait it out, I'm not 100% certain I'm going to get a retouch of the 120 in the near future. So all of us have plans and we have to adjust on the fly. We have to be adaptable. So I kind of want to start looking at the charts, and this is where I have Mr. Alan P with us today. And as you all know, of course, that we're not licensed financial advisors. So anything you hear here today is just our opinion about what we're seeing in the markets. If you were to take trades blindly based on things that you hear us talk about today, you're going to end up losing all of your money and living in a van down by the river. Now, this used to be a joke, but I wonder if this is becoming more of a reality for some of us. But in all seriousness, I do have some thoughts. Let me give my opening thoughts. Then I'm going to turn over to Alan. If you guys know who Heath is, Heath at Trade Talk, one of the best traders in our kind of extended group, and most of the community here follows him. He talked about this 2-week level right here, 48.8. And so I took a stab at buying into that support level of my spot. So I took the profit I had made on a couple of leverage trades up here, and I went ahead and deployed that spot at that level. And the reason I did that, again, it's below the 120-day moving average, normally against my rules. But this is where I think traditional TA is going to start to really shine over, these modeling, this model thesis. So what I'm looking at now, hold on one second, I got to adjust something on this. This needs to be 1 day. That's why it's looking weird. Okay. I had to bring back the 200-day moving average myself, and I'm having to rely on more traditional support and resistance methodologies. Now, there's a couple of trend lines I'm watching. Let me go to a lower time frame. And Sanjit asked on Twitter about this. So I've been tracking this trend line right here, and we seem to have touched it, and we're trying to confirm that more or less as resistance right now. However, because of this large wick right here, it's hard to say that we've confirmed that as resistance. We really haven't, because we have this price action here. We had to move back up into it, and we're consolidating above this little bit of consolidation we had here. So very different look and feel. And on-chain as well. I'm going to show you one chart. I'll hand it over to Alan. Balances on exchange continue to really plummet pretty precipitously over here. Now, this isn't the end-all be-all because of the information around how to self-custody, but this is one of the big factors I continue to look at. And so we'll talk more about it more. Alan's got longer time frame charts, so I'm going to quit sharing, and I'm going to let Alan say good morning. Thanks again, Alan, for joining me today.
Hey, good evening, Brandon. Yeah, good. All good. Slightly more chilly winter in Dalian than a month ago. Here with a bit of nice warm clothing, although it is very warm here.
That was my first comment when we first got live. We're preparing to go live here this morning. I was like, "Wow, you look snug. That looks nice. Nice turtleneck. It must be cold
nice
over there.
Snug and cozy. It's actually been really warm today and a bit wet, but yeah, it's looking ahead on the weather. It's definitely getting wintry. So
67 and overcast here, so pretty typical for us.
Chilly chilly for Texas, I'm sure. So, so let me, yeah, I mean, we can say it's been a crazy week again, Brandon. I mean, we had a stream last week and said expect the market to sell off, and lo and behold, it wasn't more than a day and a bit later we had a big capitulation again. And but then weird things were happening, and it caught me out, and I'll have a look at that in a minute as to where I was sat on the wrong side of it, which was obviously the strength of Ethereum versus Bitcoin in a capitulation, which I certainly haven't seen in the time I've been active trading in crypto, right back to doing some mining and messing around 2017, 18. I mean, Ethereum's always been sort of more volatile than Bitcoin. That's always been the pattern every single time. So I was, okay, I can see this coming down. It's retracing. Let me go a bit neutral here with some trading profit, and then it promptly goes the other way. I think, what? You know, so it's, yeah, we'll have a look at that on the charts. But it's been curious. Again, this, as you said in your introduction, we haven't really seen what we expected. The base cases have all sort of gone out of the window a little bit. Obviously, those that were lengthening cycles are looking like as snug and comfortable as I am here. But again, they could be wrong pretty quickly as well. So I think everyone's, as you said a minute ago, really back to traditional price action and keep an eye on what's actually happening now. And you know, you mentioned he said the same on Twitter a few times. You know, price action is winning at the moment. You know, because the models are breaking, and no one really knows what happens next. So let me share see if my sharing is going to behave itself. Here we are. So
that's a nice look. Where was this at?
So this was my morning walk a couple of days ago. So we get just half an hour from here. We can go to the Hygiene Park, and you can walk for about 20 kilometers just straight along the coast. It's beautiful. So this was the morning sunshine. So yeah, I mean, lovely. You know, compared to, as much as I love living back in Bristol in the UK, and obviously that is not too far from the mouth of the Severn and the Atlantic, it's rather different. You wouldn't say it was sea really. And yeah, I mean, beautiful place to be. We'll come back to some of the pictures, but yeah, yeah, enjoying life here, I have to say. We'll be here for a bit longer. Let me turn off these messages. So long term, you mentioned, what do we see? So for me, really, with Bitcoin, if you just look at this breakout and retest, really, off this consolidation and this wedge, we've broke out, we've retested. The question is, what now? You know, will we hold this monthly level 47121? Is where this current candle has come down and tested, and then which also lines up with this weekly, and I think is a weekly and possibly a 2 weekly here, is very strong looking support. And we've got the trend line, and then we've got this weekly close above at 51786, and we came up and rejected off it this week so far, but we're right slap bang in the middle. So, you know, so far this week, you can say sort of nothing's happening really, but we are holding above this support. So if we can establish support here and not sort of nuke again right down into this previous area, then that would look okay. I mean, that would just follow many of the things we've seen. It'd be a breakout, a retest, and hopefully a resumption up. It's sort of indicating patience, really, because each of these obviously is a week. It's just taking time. The idea we were going to be at whatever 90,000, 150,000 now, there's no sign of that. There's just no momentum to the upside at the moment. So I don't see a problem in this chart. It still looks healthy, but we don't know how long it's going to take to try and climb back out of here.
Yep.
Obviously, I would get a little more cautious if we are below this top trend line, and if we came back down into this support area I have in green, which obviously was the base of the previous consolidation, then yeah, it's hard to know what's happening at that point. where we are here, just this would be quite a tidy entry if you were bullish here. Looking long term, okay, we're going to climb back out of here.
And so, I had Michael on Sunday, and we talked about this exact scenario. We looked at that, almost the exact range that you have there. I had pegged like 42,000 as a potential range, but then after doing some more TA work, you've got so much support in that 47 to 49 range. I'm kind of favoring that, more or less what you have there, like a 52 to 47,000 range. We might just go sideways for. I posted on Twitter. It's one of the Twitter posts. I think the predominant views are either we break down worse and have like a summer style accumulation, or we break to the upside and V-shaped recovery out of this. Those are the two kind of predominant views as of like a week ago. And I said, what if we just go sideways for a couple of weeks in this range, right? What if
we
this
could
is
sit here into the new year
range?
quite easily? It's just bouncing around and testing these, see which one breaks. Obviously, we have a bit more weekly support here. You could have the bottom of this and then here, so 43,000. So we just, if we came back into here and we closed in here, it's almost invalidated the breakout. If you were trading this normally, you'd say you've invalidated the breakout, and then we don't quite know what's happening. So this area in green though looks strong support, so we have a base here if we do come down. So but everybody's timing's wrong. You wouldn't say, because all the on chain's not saying we're in a bear market, but I don't know.
They were all looking for illiquid supply shocks and everything else for the past couple months.
Absolutely. So obviously, I think we talk about for me the story. I said what's caught me out, even with my bullish slant on Ethereum, and this is my particularly bullish chart for Ethereum, which is this weekly. We go back to the top last time. The top here. We've obviously come back off that. Then we've got a range here which we've held. We've now got the 4 weekly candles, including this one. Now, when this came down and then it retraced all the way back up to 39.50, I was watching it and I thought, right, I'm going to get a bit neutral here, because what normally happens with Ethereum is it will catch up with Bitcoin, which should obviously sort of come down to 47. And then I sort of got my trading stack a bit neutral, not all of it, but some of it neutral, and then just watched it climb. And then it was up 6% against Bitcoin on the day. I was like, I've never seen this at all. And so this still looks strong. I mean, the only thing you can say is obviously we're not far off this all-time high and a lot of resistance here. So it's bullish for me in that this is the case for Ethereum. I was expecting to see strength. The only caveat I can see is just we aren't making any higher highs here really on US dollar. We're making lots of strength against Bitcoin. We're not pushing up here at the moment. We're just consolidating nicely. So I'm waiting to see. I wouldn't be surprised if we came back down and retested somewhere here, even if it wicks down. We'll see. It's just strong. And if we look at the simplest chart, we zoom out into I've been looking at this picture for a long time as to what is happening here. I mean, this one's the monthly views. Let me just switch it over. I mean, it just looks lovely up. We consolidated here and now we're up. We've taken out this and this, anything here that was here, and obviously be looking up here to 0.1. So good for Ethereum. Let me flip back to the right. This is my weekly view on this, which had the original breakout. We had this swing high over here, which was, so I was looking at resistance, and we've retested it. We've retested it now, broke it, retested it, and resumed up. There's always noise here because obviously we've been here before, but there's another swing high here and another one here. And then just to annoy every Bitcoin maximalist possible, and I saw other people have done this, you can put the flippening position in at 0.1559 just to really wind anyone up who hates Ethereum's changes, but it's roughly there, and we don't know because it depends what the supply, when does it get up here, and will we be post POS? Will we have shrunk the total supply? Who knows? But this is the case. I was, all these charts we were looking at with cup and handles and, all looking really bullish. We've had this consolidation here, made this lovely, sort of pinching pattern, and then we've resumed up. So what I'm doing now is, obviously I've got a bit of cash on the sideline. I'm looking at other pairs and looking at, do I take some short-term trades? Also having a look at, I might wait. I'm waiting to see if we get a retest on a longer term time frame here versus Bitcoin.
Yep.
It might be time to get back in and maybe even rotate some more Bitcoin, because the whole thesis is playing out then.
Yeah, this is what I'm waiting for myself. I'm waiting for a more long-term comeback down. And I'm waiting to see if this is, we talked about this before we went live. This feels to me like it's the market pricing in EIP 1559. My thinking is that we might get some weakness in Ethereum ahead of the ETH 2.0 event, if there's, if it gets pushed back or whatever, but as a risk event. But I could be wrong about that. The market may actually forward price that in as an almost certain success, and the move to proof of stake seems to be favorable in the market's view. So I'm keenly watching to see if it looks like we're going to get like a totally new paradigm and a super cycle type of situation playing out. I may switch my base account and at least one of my trading base accounts to Ethereum, just to have a much richer set of Ethereum and be trading in and out to stack Gwei. But I'm really waiting. I'm trying to maintain some patience here and validate this is what the market. This is not a fake out move, or a local top, because you can see on the left over there, Ethereum likes to break out and then come back down pretty precipitously. And so when you see a lot of green candles forming, the odds are, given the volatility in crypto, that you're going to come back down to some level, and have a bunch of red
down
candles.
here. We broke out and retested nicely down here. This was the place I wish I'd got out of some more Bitcoin.
Yeah,
and then we've gone up here.
Me and you both.
Yeah. I mean, I got out of some. Certainly trading stack was in Ethereum at the bottom of this consolidation, but it's
here. Yep, my order just triggered, so I just got back into Litecoin. I was watching another chart, and it came right exactly wick down to the exact dollar of the exact my order, like within a penny of my order. And yep, I just got filled on Litecoin, so I'm back in a small position with super tight stop on Litecoin myself. All right.
So
go ahead.
Obviously, the other chart I've been sort of tweeting this as well and looking at ETH dominance. Now, obviously, roughly with the weekly time frame on this, but we are up towards some resistance here. Now, this, depending, obviously, you can look here and say we had quite a nice cup and handle type pattern. If you look at this line and we come up and we hold it here, you could just look at a massive sort of inverse head and shoulders, and then where are we going if that plays out? Up there somewhere. So this is interesting to see what happens. Do we get this retest? Do we get consolidation and strength, or what happens here? Because whilst we were here then, I mean, this Ethereum is nothing like what it is now, and didn't have any of the real fundamentals about it here. This was in this wild ride at the end of 17, 18, when it all went crazy parabolic and was insane, really, because you had the Bitcoin pump, the ETH pump, and then all sorts of capitulation. And we've sort of seen this quite long here. I mean, obviously we go right back to May, and when we had that crazy 60% week sort of dump on ETH, but it's not been terrible versus Bitcoin at all through this. Really, despite that capitulation, we only lost 3% on dominance, and then we've continued up. So I'm still yeah, the base case for me is still playing out that ETH is going to gain a lot against Bitcoin over time because of its fundamentals. As you say, right now, it's patience for me. It's patience to see what actually happens. So, the other thing, the other tweet during the week, I replied to a tweet by obviously Alan, who does obviously a lot of the analytics around Bitcoin. Just looking at the pattern here, this is the US 10-year in this bull market, the 10-year yield versus Bitcoin, and it's quite crazy how close it's been during this cycle at the moment. Now, it can be completely coincidental because the 10 years in this enormous downtrend from the 1990s and has been bouncing up against resistance. But if this does continue to track fairly well, we had quite a sharp drop on the 10-year, and then we had a sharp drop on Bitcoin. Now, obviously, it's bounced back a bit, and it's not been following exactly, but that's not terrible for a correlation with two lines for things that historically have not been correlated. What we do have is on the 10-year is this very long-term, and I'll have to switch back out of this view. So let me switch back to my main view because we're going to end up with stupid lines all over the place. But if we look at this that's the weekly view. If we get it to monthly, excuse my trading views taking its time. Too many IT data connections going all over the place here to make this work. We've got this enormous downtrend here that, you see, goes right back to 1994 on the yield, and it's just coming down and coming down and coming down. We zoom back into where we are now. We are up against this line, with this upwards momentum. If we did see this potential for these yields to rise, and we get a big breakout here and Bitcoin keeps following, then who knows? That could be something to watch at least. I don't know, because prior to this bull market, these things were not correlated at all when you look at the chart. But certainly Alan's noticed it. I know other people I've did a little dig round on Twitter have been noticing exactly the same. It's tracking pretty well. So that was just a little thing to pay attention to, perhaps. And then I had a tweet over here. This, to me, I tweeted this before we capitulated, where we'd lost this upwards trend line on total cap. So we could see when we had the first correction, we were here. This was my tweet, where we'd lost this line. We'd come back up and tested it, and I was like, that's caution there. We've broken it. We've retested it. We've come back off a little bit. We've zoomed in on it. This is daily, but we come off, and then obviously we know what happened post that. If we have a look now, we'll have a look at this total market cap. Obviously, this is on a weekly view, so it's very much let's have a look at where we are now. A bit of extra TA in here. So obviously we lost that. We've come all the way down. These are weeklies, these green lines. We sort of held this weekly, retested it, but we've got stuck under this other blue trend line at the moment. So just as an indicator, it would look better for me if we could get back above this 2.4 total cap there. Things would look a little bit more healthy. I think whilst we're stuck under this, and obviously we haven't been up and retested this broken line either at the moment, which obviously we didn't do over here. We just came straight down when when it came down in May. And we've come down, and we came down a fair way there. It sort of came into this support, if you like, this swing low.
Yeah.
It would look better for me if this just clambered back out of here. At the moment, it's a little bearish coming off of there, albeit it's in a nice, fairly tight range. But it was just another indicator that was pretty good. I wish I'd gone neutral a little earlier when I look back at it, because that indicator was good. So that's really, some of what I was seeing this week. Bitcoin dominance, we've talked about a little bit before. The triple bottom. Well, let's flip it up the other way. I was going to ask a question here. If this was if you had your token that had this price action, it'd come roaring up from down there, sold off into a big wedge, and was now pushing up on the third attempt. It's like, would you be bullish or bearish with the price action? It's
Yeah, I think you would definitely be watching two areas, right? So at that juncture, if it was me analyzing that particular price action in this
resistance
exact pattern,
first of all,
I would have I'd be looking for a break to the upside of resistance, and it's going to probably move a fair bit, and then you have a wedge that's like ascending, it's kind of an ascending triangle, really kind of pattern going on here. And, if you have that break to the downside, then, you're looking for continuation back down to retest lower levels. So it's an indecision pattern at that point, because you hit that resistance 3 times. And the same thing as, if it was flip it to support. So what you don't know is how strong that support or resistance is. And a triple tops or triple bottoms. There's a lot of people that think they're very bullish. A lot of people think they're very bearish. I tend to think that they're fairly neutral, and it's just a matter of which direction does that pattern break.
Yeah, I mean, obviously I've drawn this chart very differently to if you look at the non-inversed version of dominance, and we've had this up before. I mean, it's very clearly in a downtrend. So, and obviously we have support. We have more support here. So, obviously for Bitcoin it really depends. Does Bitcoin need this to recover in order to be ultra bullish? Perhaps, but
I would think so, just because you look at the total crypto market cap and how extended it's been. I kind of question how much more upside there is in the short term on the total crypto market cap. That's like, if you're looking for places that we could look for potential, like kind of blow off top, the total crypto cap got pretty extended in May, and then we made a new higher high, but it was a slightly higher high in November. And it's starting to look a lot like a NASDAQ chart. I've been saying this for a long time, that I think when crypto matures, the long-term crypto charts, the bigger assets or the total market cap is going to look a lot like, a Y2K blow off top early on, which is what we had back in 17, 18. And then you have this just relentless, flow of funds into this new exponential growth asset class group. And so if you look at it from that perspective, this is looking like a NASDAQ chart, right? And you zoom out enough and catch a 2017 top, it looks just like the Y2K blow off top in for the .com bubble. That's basically your .com bubble right there. So anything else before this, when Bitcoin was a tiny market cap in 2013, it's kind of irrelevant. That was just a speculative asset, like a penny stock, like a biotech penny stock or something. That's how Bitcoin 2015 was trading, right? But I think people put way too much thought into what happened in 2013, and then 2017 was your parallel to the Y2K, the 2000 .com bubble, and now you have this just relentless buying, and it's this slow uptrend of new peaks and then sell-offs, new peaks and sell-offs. You look at how much time is a NASDAQ in price discovery. Depending on what your definition of price discovery and what you call the last all-time high. But like right now, technically it backed off. It made a new all-time high at 16.7 and then backed off, and now it's headed for it again. But it's been above the 15.6 top for a little while. It went down below it for just a bit. But you just look at that chart, what you see is new all-time high, a big impulse, and then a sell, and then a big impulse and a little bit of sell activity, and it just keeps marching on up. This is what I think the total crypto market cap is about to look like.
Yeah, back here from 16, you've got almost like a megaphone here. We came out, we had the correction with the, I think it was an attempt at QT or tapering or something, and then up we come. We then had the COVID dump, and it's like we've had that. Suddenly, we've got that momentum to the upside. You can argue, obviously, the money printers come on, and even more than it was, but it's just taken off, and yeah, just a change in momentum, really. If you go back, this thing is up. Go right back to the, obviously, this is when fundamentally everything broke back in 2008, but since then, with all the printing, up we go, and then we've had this
more
massive amount of printing, 23% in the year there, and whatever the number was for this will be for this year, probably it's talking 28%, 30% or something. It's just all these extra dollars, and up we go. I did see, obviously, people have asked a bit about the thought of tapering and the impact. It's to me, it's a little bit difficult. I'm not an expert on some of these macro things, but my understanding is that that's not like a QT, like the whole of QE is given up and you've started, selling things. It's just less QE is what they're talking about. So it's not like they're not printing.
right. Exactly.
They're going to print less.
Yeah, they're trying to talk their way into slowing down inflation. That's kind of, I think it's more talk to see if they can't get a lot of the inflationary pressures to calm down with them just slowing and talking. But there's a lot more to it than just that. But it feels like mostly talk to me.
This market's not looking overly concerned at the moment. That is not really a correction, hardly.
No, not.
NASDAQ, you have these weekly, every time we put out, there's a big weekly support. It just seems to bounce off it. And it's just, and it carries on. I mean, whether with the S&P, obviously I've put a similar channel, and we seem to be slowing down slightly, I'd say, on this. Just sort of momentum's getting a little bit slower, but yeah, we will see. But again, we've had another, that's just a big green week, like up. So just the same thing over and over again at the moment. We will see. I mean, dollar, what happens? The dollar story still just zoomed out, looking at, we're back in this channel. We've come out, we've got some resistance back in. It's all been chopping around here. So you could say from here we're 15. What are we, sideways, really, since 2015? Had quite a bit of bouncing, but there's a sort of range here, and obviously relative to everybody else. Be interesting times. I've said before, and I still keep an eye on the news. I don't think the Eurozone, the UK, Japan look very good economically. So we may see dollar strength, not because the dollar is strong, but because everyone else is just falling to pieces and has to print more money and just going to weaken their currency. Sterling's looking pretty nasty in the 131 versus the dollar. I'm quite glad I've got things in measuring them in dollars at the moment and not all in sterling, because it's painful. So yeah, I mean, obviously we've had a few other, looking at some other assets, but we're seeing this volatility on the other tokens is very high. Link 8% today, and DOT's been very volatile. So Matic's off 9% here.
So I've got some comments here related to the DXY talk that I think are good chatter here. Greg's saying there's a lot of money on the sideline. There's like $3 billion in new USDT that looks like it's been created here fairly recently. So we might have some money eventually flowing in once we find a bottom. You got a comment from R. Rosso that he thinks that the ETH fundamentals and its proof of stake updates more fairy dust, and is afraid that Gary Gensler is going to categorize all these as securities and come after the venture capitalist insiders.
He's
would
not had a good week.
Huh?
Gary, he's the subject of a lot of memes, Mr.
Yeah.
Gary, this week for when he started talking, he had no idea what he was talking about. So yeah.
He I wouldn't be surprised if they did go after a bunch of cryptos as equities. I would be kind of surprised if they reversed course on their earlier statement before he was, SEC chair, that Ethereum was properly decentralized, quote unquote. Now, after proof of stake, I can see them kind of reviewing that and seeing if things maintain that way. But as of right now, the last statement from the SEC we have is that the only two that they consider properly decentralized, I remember a statement saying Bitcoin and Ethereum. That's all I remember. But as far as that goes, I mean, it certainly could be coming. There was all that meeting yesterday with the Senate, I guess, and they brought all these centralized exchange CEOs. They brought all the crypto CEOs. I'm like, this is such a stupid. I was so annoyed by that. I was watching parts of it.
They need someone to bring as a CEO, because ETH and Bitcoin don't have a CEO. So who do you bring?
Let's bring in all the centralized. This is totally antithetical of the whole purpose of all of this. But whatever, you guys talk about whatever y'all want to talk about with your centralized exchange CEOs there.
They've got to teach some of these politicians what a blockchain is, and it's just a bit cringe watching it.
It is very cringe. And then Greg made the good comment. The media talk of inflation is just to train the listener to get used to it. So that's viable. I would say a very viable reason why you hear so much stuff about inflation is they know it's going to be here to stay, and the chatter about it's more to train us all just to get used to the idea of pretty bad inflation. I do think that they have to do something about inflation, else there is a viable alternative out there now with a lot of cryptocurrencies coming online and more access to it. So I do think that they do want to at least make it less. They need to rein in inflation somewhat, or the crypto and Bitcoin narrative will really start to gain adoption. Like if U.S. citizens actually see 10% year-on-year inflation, they're going to start to really look for alternatives, right? And this is just going to be, we'll see. They need to do something about it. But the other thing about it is, as much money printed, they can't stuff the money back in the printer that they've already printed, digital printer. So that inflation still is going to take place. We still have another 2 or 3 years of probably 10 to 12% real, inflation because of the printing that's already been done. So that cat's out of the bag. So that's the other part of it, is that there's nothing they can do about the next 2 or 3 years. I would say. But anyway, I don't know. This is an interesting topic.
The other side of inflation, obviously, is wage growth, and it's mixed. I see different opinions. I'm not all over the US. The US data and the intricacies of it, because obviously all this data is subject to understanding how they compile the data. But certainly over a longer period, it looks like obviously wages for the majority are not keeping up with inflation, and higher inflation is going to make that worse, make people unhappy.
Yeah, and that's the thing, is that it's always
political consideration, isn't it? People are going to get pretty unhappy.
Wage growth is generally always going to lag inflation. There was a few years there when inflation was very low and the economy was doing very well, that companies were giving 3% raises, and inflation might have been 2.8%. But there's no way that companies are going to give people 10% year over year raises over the next few years, right? And that's because another thing too is the official numbers from the government are much lower. The CPI numbers are much lower than real inflation. Real inflation is probably 12%. 14%, somewhere in that range. So there's no way people are getting 12 and 14% year over year raises for the next few years. So I mean, all it is it's a tax on the wage earner, is this inflation. So by the way,
Yeah.
I've already been stopped out of my Litecoin trade. So I took a stab at buying 156.64, and I had a 155 stop on it, and I've gotten hit. I'm watching the charts. Man, we went live, and Bitcoin decided let's roll over. Time to go. I'm sorry, everybody. I swear we're not the Wyckoff overlords. We are not causing this. I swear to you.
Yeah, I mean, it's real. We got some real time selling, obviously. You know, ETH to Bitcoin's in a more normal ratio here of
where's ETH
3.8
Bitcoin?
to 4.5. You know, it's
we had this bit of a sell-off here. This ETH BTC is just consolidating here.
just
I would love for ETH BTC to come back to that bottom trend line one more time. But it's like I say that, but when it happens, am I really going to make the transition? What I still have yet. I mean, this is where everybody has a plan until you get punched in the mouth. I'm getting punched in the mouth right now because I've started to consider rotating my base account from Bitcoin to Ethereum, but I can't wrap my head around a lot of things, and I just don't feel comfortable doing it. So it's like, at what point would I actually consider doing it? What technical level? I have to go decide that, right? I have to make a new plan, but I have to be decisive about it. And the problem I'm having just on this topic of Bitcoin, Ethereum, and Ethereum flipping Bitcoin is I see more competition for Ethereum than I do for Bitcoin, because I think Bitcoin represents an idea, and as what it kind of invented that's beyond technology, and Ethereum too, largely. I mean, it invented the ability to do full programmability on a blockchain, right? So the introduction of gas fees and the mechanisms around that are an invention that is worth something, that has durable value beyond technology. So this is why I think they're both fairly safe. It's just, at what point do I go, okay, the market really cares a lot more about proof of stake chains and being energy efficient and whatever else is going on here, and it's fading Bitcoin. At what point do I really believe that? And at what point do I think it's a big fake act? At this point,
got that same conundrum a little bit, but as someone into sustainability for 25 years, I see proof of work as a liability long term. And I think there are I've seen some voices in the Bitcoin world who will say that, but obviously there's a hardcore position which won't have anything to do with changing anything in Bitcoin world. So, we won't see a change anytime soon, but it won't just be China. And I've seen other countries have said the same. They don't want Bitcoin mining exploding because they don't have capacity in the energy grid spare to deal with it. So, it's not what they see as a priority right now.
right.
I mean, of course, you can make sustainable Bitcoin mining, but how many pictures? I've got some stuff linked here, which I haven't used on these streams, but how many pictures of all the fossil fuel execs sat in a room with talking about Bitcoin mining do you need before you think this doesn't look very green? It just doesn't. And you start reading all the greenwash that we've seen to do with climate change for 25 years and think, well, I've seen all this before. So I'm still holding my Bitcoin. I don't have a sort of anti-Bitcoin position, but I also don't think people should put their heads in the sand regarding risks when they're in investments. It is a risk and it needs to be dealt with. And I don't see anyone dealing with it right now. And Bitcoin could be the General Motors versus Tesla if it's not careful in the world, where one's changing and evolving and the market's following it and the other one isn't. We will see. Are people really invested in crypto for some of those things that Michael Saylor says as well, really? Or are they just here because number go up in the end? If ETH looks like it's going to go up more and it's safe, a lot of investors will go, I'll have some of that.
We had a question about, so QDizzle asked my thing about, so the Fed, they can, sell assets that they've purchased. They can decrease the money supply, sure. And they've done it in the past, and kind of, if they do that, it's probably a bit of a manufactured crisis because of the overprinting. And then maybe like there's historical, accounts of where basically it appears, now I don't have any proof of this, but it appears that they've contracted the money supply on purpose to put certain political pressure or constraints. I mean, it was not so hiddenly done back in I think the 1800s in the colonies, if you recall. There was this big spat between, I don't know if it was Alexander, not Hamilton, what's his name? I'm forgetting the name of one of the founding fathers, right? And one of the central banker of the time that had the big reserve bank. And so he purposefully, and then bragged about it, that he contracted the money supply so that it would put a crunch on the political. So they were trying to crack down on these, I guess, these more rogue banks that are out kind of in the Wild West. I can't remember exactly how the story went, but he definitely bragged about contracting the money supply to create a crisis, and it kind of backfired on him ultimately. But so
you
there
wouldn't
have been
put
times
anything past anyone sometimes, would you? I mean, you see the market making statements, as people say at times, when they don't like the policy or whatever, and you can dump the market for a while. It's
Yep. And so
yeah.
they could certainly contract the money supply and rein in inflation, but they would create a different crisis, which would have a different set of consequences. And so that's where I'm saying that they can't undo the printing they've done without changing, so either they create a different crisis, which is probably worse than, 6 or 8% CPI, 5% CPI inflation year over year for the next 4 or 5 years. They can probably manage the numbers like a 12% real inflation. They can fudge the numbers and call it 4 or 5% CPI inflation, and probably, talking heads their way through it largely without people being too terribly upset. But if it gets much worse than that, then I don't know what choice they have. Or they can create another crisis, go the other way, and contract the money supply and create a whole different set of crises, which the government then is subject to, the insolvency, which is a much bigger problem. And so I don't know how they get around that. So I don't know. The point is I don't think they can undo the actions they've taken without causing a bigger crisis. It's kind of more of the point.
I enjoyed obviously watching Michael's piece with you last weekend, and I think there's some real, you look at the debt clock and you look at those numbers, it's trying to grow your way out of that. This is why I think that whole almost like conspiracy around the Great Reset sits there, because people don't think there's a way out of this situation now. When you zoom out a little bit, it looks to me like you can still print for some considerable time. It's not the whole thing of the end is nigh and next week everything's going to go tits up and that's the end of everything. But that's not, I don't think that's where we are. I think there's going to be, it can go on a lot longer than just now. But is there a sort of structural way out of it? Really, having made that decision in 2008, there isn't really too much of a way back from it. You decide the banks aren't going to go bust when they all go bust. Okay, well, then you prop everything out with printing. So if you want to stay in office as a government, or you want to stay popular, you've got to keep printing. That's the the crux of the policy. It goes wrong eventually, but that's another administration's problem. Somewhere up the road. That's the I guess sometimes the short-term nature of politics. It worries about the next cycle and perhaps the next election. So
the political whims are what drive a lot of this. We have another question here, Alan. I don't know if you want to weigh in on this question too, but the question's for me, but I'd like your thoughts on it. See, I remember the last crash of the powers that be, and the high players got a smart understanding of models that we use and wanted to use that against us. Any thoughts here? My thought here is that so there may be those that are trying to play this market and suppress it through the end of the year. Now, if you listen to Raoul Paul recently, he talked a little bit about this in an update, and he just talked about how money managers work, and if they were invested in the crypto markets, there might be a lot of selling into the end of the year so they can kind of lock up their bonuses. And again, we have different players, and so everybody kept saying, "Oh, it's not different this time; it's the same." The different players don't matter. Like, well, institutions do things differently, right? They have quarterly quotas and bonuses and things that they're working for.
Rebalancing and all this stuff.
Rebalance, exactly. So there could be real, this could just be real legitimate rebalancing and selling and whatever else of some of these assets, because they're up quite a bit from a lot where a lot of these money managers might have put some money in it. But the other part of it is yeah, there could be some manipulation, knowing that everybody was looking for a blow off top at the end of the year. You know, I wouldn't be shocked if we bounced, if this stays suppressed through the mid part of the month, and then we got a good strong bounce to say 53,000, right, or 54,000, and kind of retake this bottom trend line, and then you're going to have a lot of retail FOMO going, okay, we're gonna have a big move to the end of the year after all, right? If that were to happen, say the next week or so, and then it just to collapse on them again through the end of the year, right? And so the thing is yes, but we know for a fact, right? There's no question that big players use trading data against people, right? That's how what's the green logo? Robinhood. That's Robinhood's business model, right? Is selling user data to the big players to use against retail. And so they don't have to go buy Robinhood data or Coinbase data. They probably do, but they don't have to buy that data. They just get on Twitter and see all the charts and all the, hey, we're going to 500,000 by December 25th on Twitter. And go, okay, this is what retail's playing. Let's play against them, and trade against them. And yeah, so I think that could be a factor. I think what Raw Paul talked about, just real money managers just doing their job and taking their their profits into the end of the year and booking some bonuses and stuff like that. Probably another real part of this. But Alan, what are your thoughts?
Yeah, I mean, I think I watched the attempt to buy one of these copies of the US Constitution, or the Constitution DAO, because it was obviously an Ethereum related thing, and it was all over Twitter for a while. And it was like, you go into the auction telling the people that you're bidding against how much money you've got, which was like, well, you're never ever going to win the auction if there's anyone who wants to buy this on the other side. And yeah, to some degree that logic is the same, which is you're advertising exactly what you're going to do or how you're positioned, and you've got Wall Street involved now. All hedge funds are involved. As you say, institutions, you've got funds. They'll be, just following their rules, if you like. They're not trading decisions as much as just the rules of running the fund. So absolutely, you have a lot of things that are a little bit different. So when 2017 was a little bit more of a free-for-all with retail, pile a load of money in, the price rockets up and you get a blow off top. It won't take too much for the city to suppress this. If you're a conspiracist a little bit more, and I'm not really of this mindset. I think I follow geopolitics, but I don't buy a lot of wild theories people come up with. But there is obviously a position where now you've got a country, and possibly some more countries, who have staked their position that they're going to effectively use Bitcoin against the US dollar, which is like, we prefer Bitcoin. Obviously El Salvador's positioned it as well as the US dollar, which may be a defensive play, but that also is quite a dangerous position for anyone. If you've ever followed geopolitics, you can see what happens to people who are trying to not trade using the US dollar and are going anti the US government. So obviously one way to make that harder is simply to suppress the price of Bitcoin. And for a nation state the size of the US, that's a rounding error with all that money sloshing around. That's a conspiracy theory. It's not something I'm particularly subscribed to or anything. But it's not impossible to keep the price of Bitcoin from going anywhere, as a way of controlling it, if you like, so that there isn't this risk of it taking over. So I think you could come up with probably 20 more stories along those lines, but it's not impossible to see that there will be people who are against this price rising, if you want to just word it that way. And there is no reason why they won't be playing here in this market. quite happy for it to stay in this range for a while longer. Obviously, then you have people acquiring lots of coins, and obviously we know who Michael Saylor is, but we don't know who a lot of the other whales are who are stacking Bitcoin. And the data shows they're stacking. So who are these people and what is their motivation? So who knows at the moment?
Yep.
You know, it's you sort of delve into, I think, a bit of a mystery there. I think everyone's got a take, but I don't think you've got really an awful lot of proof or evidence that as to what's happening.
Yeah. So what you just saw, what you guys are watching me do right now, the Myar exchange just came back online. So while Alan's talking, I'm over here working on farming. Sorry.
Yeah, I know you've been stuck for a while with your farming.
Well, it just like I just logged in.
Somebody's switched it off and switched it on, and finally it's come back on. So
before the exchange went down, the one pool went way up in APR appeared, and so I bought more of the MEX token and less of the eGold, and I staked just straight MEX tokens because it was yielding higher. And I just logged in, and it's significantly lower. So had this whole time we've been down, if I never would have fallen for that, ended up being a bug. The APR was rising. If I would have stayed in my eGold MEX pool, I'd have had way more rewards right now. But I'm currently unstaking from that. I'm gonna swap back around here a little bit. So I've got some farming to do. So we'll talk. I'll stay focused on talking about charts. But I just noticed the exchange just came up, and I'm like, so if you're in eGold with me or with us, the exchange just came back up. If I want to go check things out, it looks like the APR and the eGold MEX pool is a lot better. So I'm going to go back.
I had a little look at the chart. We seem to be holding weekly support on eGold dollar. So it's had a bit of a blow off top there. So
the MEX token price is nicely. It's at 9. Yeah, I don't know if it's. I don't remember what it was before we went to the lockdown here, but or to the shutdown. But yeah, eGold's been doing it's almost up to 20% of my portfolio, and after all this yield farming, it probably is over 20%. So that's keeping me distracted from this sell-off. So all this noise about this, whatever's happening with Bitcoin selling off here a little bit.
Selling off a little bit. We've got a US
or it's more consolidating than anything in my book. It's going sideways. It's definitely going sideways.
Still, if we go back to this chart, is nothing happening, and keep yourself sane. But we're just stuck in this range. It's obviously slightly scary if you're leveraged at the moment. So yeah, I mean, our usual ETH measures, we were approaching the 1% now of all the ETH ever issued having been burnt. So that continues. We've had a fairly quiet 7 days here. We're at the 62% rather than we were up at 80% to 90%, so some of the chaos. So obviously 30 days are a little bit higher, 75% offset. So at all time we're still well over half of all the issued ETH has been burned. So we've definitely got more than a halving from 1559. Fees remain, they're down a bit from where they were. 7-day average 46 million here. Again, huge ratio versus Bitcoin. If we're looking at value, I'm not value investor particularly in crypto because it's mostly about momentum, but Uniswap PS here, it's probably lower than this now. His price will have come down today, but very low for crypto, 1.8 ratio. This is their fees. Uniswap's fees are genuinely their income as a business. So that as a business, if you're looking at a tech business, which has got potentially a lot more upside in the future as people come into crypto, it's obviously the biggest exchange of its kind still at the moment by fees. Looks undervalued right now, but I say for crypto, it's slightly different. If that was a proper, stock, then you might look at it slightly differently from just being a crypto token. But yeah, Uni and Sushi both trade in PS of under 2. ETH is around 30 at the moment on its fee revenue. So just something I noticed looking through here. Obviously, these swap fees. Just a reminder to everyone, you can play on layer 2 on Ethereum and you don't get clobbered with big fees. I was using Loopring when I was incorrectly playing defense the other day. Using Loopring, just, no fee really. I mean, what we got with 64 cents or $1. So if you've got a fairly sizable trade. And as I said the other day, for everyone, just remember you've got to look at your slippage as well when you're using a decentralized exchange doing swaps. There's no point saving $150 in gas fee and then getting a $500 hit on slippage. So if you've got a reasonable size of your trade, so just make sure you're paying attention to everything. And obviously we've seen a drop in, as we might expect. We've started to see a bit of a drop in the locked value. When we've been having, obviously we've had the heavy corrections. So as always, you start to see a little bit of perhaps people being cautious.
I think it's the value. So a lot of that locked value is like wrapped Bitcoin and other crypto assets that are.
Yeah. If you measure it in ETH, obviously it's come down.
Oh yeah, okay. Yeah, and just the amount of ETH is locked in, so people are actively taking it off.
Yeah, I'm wrong. But even then, that's probably US dollars measured as ETH, and of course ETH has been very strong, so potentially it's come down. Yeah, so people will be getting wrecked, getting liquidated, playing defense with this market. So we're seeing 140 gas, but that's very modest for given we got volatility. It's not showing any great craziness at the moment. We were at 600 gas in that big wick. Trying to go to click on swap on layer 1 and it says, oh, you can say $1,000. It's like, oh, lovely. Gas fees for whales.
It is. It's crazy, but yeah, that's the thing, is that it's pretty much forcing the average user to go to layer 2, which is actually really healthy for the ecosystem. Once people kind of get on layer 2s and understand it, then it's healthier for the ecosystem, because then, like you said, the super high value transactions that if you're moving, if you're tokenizing real large assets like a house or property or a multi-million-dollar CryptoPunk NFT or something. Spending a couple $100 to move that, it's no big deal. But if given that you don't have to pay any other fees associated with those transactions, but those high value things can stay on the layer 1, and then everything else, shift it to layer 2.
Yeah, and I'm seeing usage is still growing, and we have seen more progress. ZK Sync is making good progress, which is a lower cost layer 2. So yeah, I mean, I have funds on Optimism, Arbitrum, ZK Sync, Loopring. So we talked about the airdrops last week. People get positioned for airdrops if you can. Do some research on where the airdrops may come. It's literally free money in the end.
I have a question on the chat about how is funding. Let me go look at funding rates real fast. Last I looked, it flipped negative for a little bit. And I think it's mostly negative right now to very neutral as far as funding rates. So the big sell-off,
everything had reset pretty heavily with the correction.
Yeah, it had reset heavily, but also we had a lot of open interest, which means there was a lot of derivatives versus the underlying asset, right? In a ratio, more or less. So the open interest, there was a lot of talk about the open interest needed to probably come down. And it was my assumption that through consolidation or a slow kind of grind or sell-off, open interest would kind of abate, and then it could continue. I did not really think with neutral funding that much open interest would cause a liquidation cascade like it did. But apparently it still can. And what that means is that the order book is also probably now, not the order book, but the open interest rates are getting more and more slanted toward the short side. So, it's been a long time since we've had short liquidations. We've had a lot of long liquidations, not a lot of short liquidations. So what open interest
Usually
remains
goes the other way, doesn't it? It'll go
probably
stop everybody
mostly
out
on
the
the
other
short
way.
side.
Yeah, and
We can look at it real
it's
fast though.
yeah, I mean, it's entirely likely we'll see the short squeeze at some point. I usually do.
Yeah, so perpetuals
Yeah.
funding future rate. So that's like the biggest one to watch. It's one of many derivatives, right? There's options and others, but the perpetuals funding future rate is very slightly positive. It flipped negative on the 4th and the 5th of December, and then now it's gone back slightly positive. Let me just look at overall open interest here. Where's my open interest? Oh, here we go. Options, all exchanges, options, all exchanges, options open interest. Options open interest specifically is pretty precipitously down. Yeah, it's coming back up. I mean, it got down the 26th of November and the 4th of December. Options open interest was pretty down. So all in all, I mean, the OI, the open interest was fairly reset. I believe there's still a fair amount of open interest though. But what I don't have a good read on is I think it's getting to be pretty slanted to the short side on what open interest there is left. So back to the thesis of I think we'll see at some point. I think we'll see a big move to 53. Maybe it'll overshoot that and go to 60K and create a lot of fervor, only to snap back down to this consolidation zone. That would be what I'd be looking for. But you just never know. Just the way things are playing, everything is totally reset. As far as I can see across the board, it's just reset. Like there's a lot of coins that have come off exchange. That's maybe because of self-custody education and everything. So it's largely part of it. But there is some real buying there. But in addition to that, the open interest, funding, futures funding, all the derivatives markets have been pretty much reset. And it's like basically it feels to me like 46K is the new 10,000. Really, it's kind of what's going on here.
Yeah,
40, like the mid 40s is like the new 10,000. We've just kind of reset everything.
Yeah, I mean, I saw a tweet. Again, I'm not great with options and such like, as not something I've ever got involved in trading. But they were saying open interest on Bitcoin was a very, very high.
Mm-hmm.
It was getting very high and still very high. So yeah, I think lots of people were looking forwards a little bit as well, speculating on this same price action people were expecting and hasn't come to fruition. So in all the different ways they can. So yeah, so I mean, we seem to have at the moment we've held up a little bit with the selling. So 4.6% on ETH, but if we go to ETH, BTC is 1%. It's just noise at the moment. So Bitcoin dominance is only up. Well, it's not really up at all, 0.2%. So sort of like Bitcoin's not showing strength in selling off. It's just I shouldn't know whether you should be worried. It's usually Bitcoin's, if we sell off, Bitcoin dominance sort of resets quite rapidly, and it just isn't.
That's super interesting.
Well, it's just different.
Yeah, the Bitcoin dominance triple bottom is perplexing. We're just totally in a new paradigm, and this is where Heath made the comment. I guess I didn't see it. You said he did that. Traditional TA is winning, and that appears to be what's going on here. We're just going to have to shift gears and watch price action and follow price action, and the rest of it's just kind of at this point, in the longer term, things could definitely change direction here. But a lot of the other ancillary metrics we look at, they seem to be less and less impactful. But that also could be a short-term phenomenon too. That's the other thing to keep in mind is that again, I wasn't a conspiracy theorist in the market. I just thought the market was always what the market did, and our job was to understand it and to position ourselves around it, the probabilities around it. But having seen somebody all year long etch a sketch Wyckoff patterns on this chart, I have to believe there's some. Now, whether it's completely intentional and controlled by one entity, or if it's just this is more human psychology and this is just how institutional trading patterns play out, I don't know, and I'm not going to try to guess. I don't really care, honestly. All I know is that there's clear fingerprints of a different. If nothing else, it's a clear fingerprint of a different type of trader involved in the market that is now driving things. And as long as we have that, I'm of the mindset that I'm simply going to rely on my more tried and true price action and following price. And then, if we get a breakout, significant breakout one way or the other, then I'll see, I'll figure out what the fundamental metrics were telling us and figure out which ones were useful, and then weed out the ones that weren't useful anymore, right? And I'll continue to do that. That's what I've been doing all year long. Is every time we have one of these corrections, and there's certain things that I'm watching that were just not useful at all, I just quit looking at it or quit using it, because it's clear that is not what the market was paying attention to.
Yeah, I mean,
or that wasn't good. That was not signal, as we would say, right?
I mean, obviously the other thing that's happened previously when we've made these wicks generally is we've come down and tested the wick, and also I've seen some chatter on Twitter where one thing I noticed, and obviously these wicks are all as ever, all different levels. I mean, this one here on Binance is sort of 42k. I think one on Kraken's a bit lower. But if you go to Gemini's USD pair, it actually held at 47. So it's quite difficult to. People say, is it going to come down and test this wick? I don't know. I don't know which wick you're looking at.
Yeah.
It's like they're all completely different. Obviously, could it come down a bit lower? Yes, of course. Will it retest? Could come and retest this line again. Would look tidy as well. So we just don't know at the moment. We just know we're in a downtrend at the moment, and picking bottoms in downtrends is hard. Obviously, you go to the short term where nicely holding 47. We're in this downtrend until we get out of this.
I'm pretty much done. I'm done with trying to.
Every time we go to a strong resistance like a weekly, there will be people shorting. So that's
the way I'm done trying to figure out what's going on until we get back above the 50-day moving average. So at this point, I'm just going to hold my spot and weather the storm, unless we get a significant change in the thesis, right? Something very different would have to happen for me to be like, all right, I'm selling my spot Bitcoin. But at this point, I'm just going to hold and monitor the situation. And, when we get back above the 50-day moving average for me, then I'll look at taking trades again. But until then, I'm not taking any trades. I did trade some Litecoin here on the way down, and I probably will continue to do so just because it's so bottomed out that like these trades I'm putting on, I put one on at my last trade before the stop out was I bought the monthly support at 144. And rode that all the way and got out largely at 167. I sold, I had an order sitting at 167, and the rest of it was stopped out at 156 when we touched that bottom line. This last order was me buying back that 156 purchase, trying to play the range to see if it wanted to consolidate between the daily Heath levels of 156 and 167. So it was a buy at 156 and a sell. It would have been an immediate sell at 167, just playing that range. But that obviously is sliced right through that. So that's the only, one that I'm looking at trading, is because it's so much toward the bottom that some of these, like just trying to buy into support down here at the bottom is worth it to me. But this will be that was my last attempt probably. And now there's a trend line I'm going to wait to break out. But otherwise, I'm pretty much
fishing a little bit there.
Yeah. I mean, I caught one. So all in all, it was a net win, right? So I caught 144 up to 167, and then I sold the rest at 156, and then it bounced to 167 again. And so I bought back at 156, seeing if it wanted to just continue to be range bound there, and sold at 155, right? So all in all, my trade really was from 144 up to 167 and 156, and then a tiny, probably not even 0.1% stop loss. But that's it. I'm done trading until we retake some technical levels, right? So now I'm waiting for the 50-day moving average on Bitcoin to be retaken to try it. And there's a couple of like really strong downtrend trend lines on several crypto assets that I'll continue watching those myself and see if we get a technical break of that, and if we get some resumption off of those levels, then I might put something on. But Ethereum, is it coming off 47? Yeah, things are.
Yeah, we're down now 4,100. So we've got some. Looks like we've got some more serious sell pressure. So, which again is why I've been cautious. But I mean, let's have a look at ETH BTC. It's coming back into support. We'll see how far it wants to come down. We'll do a stream when it's going up one day, but I don't know when that'll be.
Yeah, one of these days when it's going up. All right, well, it's about time to wrap. I'm over here trying to farm Eagle at the same time, trying to make sense of. I'm like over here swapping some mix for some Eagle, trying to get back into that pool.
Yeah, I mean, I had a little bit China stuff, but we can cover that next week.
Well, go for it. Yeah, how about we wrap on that, and then I will. Then we'll
let you
the Doge wave.
So yeah, so I mean, there was a few things also I put on Twitter, just news on China. Because obviously we keep reading all this China collapse story. They run it every week, I think, in the media. It's just so obviously you just have to zoom out and look at the data. So foreign trade for China's 22% up through Jan and November, already past 2020, and just looking very strong and continues to look strong. Lots of big numbers in here, particularly in this, ASEAN area. And particularly noticeable that we saw trade with the US up 30% year on year. So it's funny because sometimes when it comes to money, the politicians do a lot of fudding, but actually when you have a look and you look at what's actually happened, trade in both directions is up substantially between the two countries. So that probably tells you follow the money. You can see what's actually happening, not as the politicians all, saying whatever to various voter bases and politicizing things. So, so trade's very strong there. And, there's an interesting story here, and not to have a dig at my many friends in the US, but this was in the Business Insider here. This is the Indian version, but one of the big measures about who's the richest countries flipped in the last 2 months. And we're going to just keep seeing this. And I've said before, it's not because of any political things or any of the ways it's made out. It's just China has 4 times as many people. And as people get richer, when you do the sums, the Chinese economy is going to become much, much, much bigger. And as people come out of poverty, which is what sits in this, that has to be a good thing for humans all around the world. I wish we'd see more of this coming from India as well, and then a lot of the other countries in Asia, because there's a lot of people whose lives are still really, really difficult in this part of the world. And if we go to Western China, we'll see there's very different to Eastern China, and there's still a lot more things can happen, but it's just interesting seeing these numbers. They tell you a story economically, often not what's reported in the mainstream media. Obviously, we'll see again another panic, I'm sure, with Evergrande, because they've missed another payment. Obviously, they've been late on all the payments. The Chinese central government is making it very clear they will be deleveraging this business, and there will not be any big crisis in China. There's a whole raft of these articles this week in Chinese media that Evergrande was summoned into meetings in the province where they are. They've been tasked with disposals, accelerating disposals of assets and other things to make sure it's orderly. I mean, I think the thing with those overseas bonds at this point, yes, they should be making those payments. It's going to create a bit of noise. That's a very small part of their debt and their overall position. So, most of their debt will be with other, obviously will be with suppliers, and they will need to pay people in China. Obviously, that has some impact. The government will be looking at that, and Chinese banks. We've seen various moves this week to release some additional capital into the economy. So you know, everything's calm here, and the general trade numbers are very, 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 very good. So I think it'll be bad for Evergrande. It'll be bad for, I think, 3 or 4 others of these developers. They got themselves in a mess. So, you know, really, in a capitalist economy, if you get yourself in a mess, you should suffer the consequences of that. And you know, with these companies, there's always a bit of a rule I've seen over the years when they're a property developer, is when they start doing things like buying football teams in other continents and getting themselves all involved in things that they shouldn't be in. It's often a bit of a red flag if we're investing to say, what am I doing buying this business? I'm not sure they're focused on what they should be doing. And Evergrande's been one of those. It's got itself tangled in lots of things. So, I mean, in the end, you could say it's just been a bit of a poorly run business. That's the long and the short of it. And obviously another thing may not see too much about, RCEP, world's biggest trade deal, comes into effect on January the 1st. So 25 trillion in economic output. This thread's pretty good just describing what it is. So you note it includes Australia, New Zealand, Japan, China, and then you've got a lot of the other nearby countries here in Asia. So huge trade deal. It will just continue to hopefully help grow this region, you know, to especially some of the other countries here who are not the developed countries, particularly wealthy. But, you know, this has less rules, it says, than some of the other deals, and will aim to eliminate tariffs on 91% of all industrial goods. So, so a huge, again, another huge trade deal in this part of the world as it continues to grow. That's been my tweet we covered there. You know, I obviously, when we looked at this trade rising for the US and inflation, it's worth remembering that putting a trade war into place is effectively taxing American companies when they buy things from China, all the things on that list, which will fuel inflation. It just puts prices up. So, so I think, you know, again, that's for the US to decide how it wants to manage its affairs. But, you know, trade wars throughout history really haven't worked when you go back and look. They're nearly always a negative for both parties. And certainly one of the things they could look at doing if they want to try and cool inflation down would be to cool some of these tariffs down, because American businesses right now are making it very clear they are going to keep investing in buying and trading with China. And, you know, those tariffs are a tax. So, you know, if the US, I think, wants to rebalance, as is being talked about at the moment, and promote domestic supply chains, and you can see Tesla does it, is a case study. I mean, I know Mr. Biden doesn't like to talk about Tesla for one reason or another, but, you know, as the giant elephant in the room when he was talking to General Motors about electric cars recently. But you know, you can build US-centric supply chains, but obviously the US will need to make sure its infrastructure and all of the support that its companies have is competitive. You know, and that's, you know, I'm sure something that must be known, that, you know, you go and see, say, the ports in Shanghai, 100% automated. It's all AI. It's driven by 5G connections to all the devices, you know, and money's pouring into this sort of huge automation in China. It just makes things competitive. And that's probably the story under here, not thinking that you can just put tariffs all over the place to try and fix issues. You know, they fuel inflation. So, so that's just a little bit of a look at what's been going on. Back to a picture. This is where I live, in this part of Donggang area at the moment. So go for a walk here most days by the sea. So it's very pleasant place to walk. And we do have Christmas as well, for those who probably read some stupid story that Christmas is banned or some other nonsense that seems to float around on the internet. So we have lots of Christmas trees and lights, and this is outside a department store. There's many shopping centres are very Christmassy. We've had Christmas songs playing in one of the big malls and had live performers there and all sorts of things recently. So, obviously not as big an event in China as Chinese New Year, but certainly one that's very visible this time of the year. At least they don't put the decorations up stupidly early. That's one thing I do like here. In the UK, Christmas somehow seems to start in September now in the shopping centres, which is ridiculous.
You're a little burnt out by the time you actually get there.
That's right. So Christmassy on just in downtown Renmin Road here. So see Starbucks here. I always joke, as people say, is American investment in China is an American company on every single corner. So I'm not sure what all these fudsters are talking about. I will take a trip to the software park as well. We went there briefly last week, and you'll find all of the big international players there in Dalian. Big area, free trade zone, software park, high tech businesses, but all of the the high tech businesses, IT companies, consulting companies, etc., are all there. So yeah, I don't know what the moral of this tale is, but probably don't believe what they tell you in the media. Everyone should know by now, if you were investing on that, you'd have lost all your money a long time ago. So
no joke.
Do your own research, find out what's actually going on.
Well, all right, Alan, I'm gonna wrap here then. Thanks for sharing your journeys and your ventures. I need to probably have some few photos for me to share of some stuff sometime. Maybe next time I go live, I'll just share a few photos of my
Absolutely.
where I'm from.
Where you are, and get some pictures of the Gigafactory. We have a look at what's going on with
I'll
Tesla.
be there next week. I'll drive. Yeah, I'll share some pictures of the Gigafactory. I'll be driving by it next week.
Excellent.
All right, guys. Well, take care, Alan. Thank you so much for joining me today, Alan. Thanks for your insights and sharing your journeys. Appreciate it, and we'll catch you next week.
Cheers, everyone. Cheers. Bye-bye.
Bye.